Tesla, all right, I won't pretend to know how high Tesla stock can go. A $400 billion valuation seems kind of crazy, but so did a $300 and so did a $200 billion. Here's what you might be missing, though. The buyers know that Elon Musk will get Tesla to grow into that market cap. I don't know how they know that. They just do, and they won't be dissuaded. I've always said Tesla's a cult stock, even after I joined the cult last year, that shareholder base isn't going anywhere, and neither am I.
Shares of Tesla in focus today, down about 0.8% right now. The company announcing today it plans to begin exporting Model 3s made in China to more than 10 European countries.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So tomorrow, Tesla reports their Q3 2020 financial results. I'll be live streaming the whole event at 5:30 p.m. Eastern Time on the channel. The live chat will be open so we can share our thoughts and opinions. And of course, the insecure basement-dwelling Tesla Q trolls can also pop in, say hello, and explain how Elon Musk is paying me $420,000 per month to spruik Tesla stock, because obviously I don't believe anything I'm saying and I'm just a paid mouthpiece for Tesla. Of course. And in the interest of full disclosure, I bought more Tesla stock today. Once again, just fractional shares because I'm still broke AF because I spent all my money buying Tesla stock. Probably a good problem to have. As I'm coming at you right now, early morning trading, Tesla stock at $423.90. And in the lead up to Tesla's Q3 earnings, we've just heard Tesla begins to plan exporting made in China Model 3s to regions in Europe. And of course, this has presented a fantastic opportunity for Tesla bears, shorts, shills, those with inferiority complexes who hate on Elon because he makes their life look embarrassingly hopeless, because it is. Adult virgins, neckbeards, etc. to come out of the woodwork and explain how now Tesla obviously has no demand in China, the world's ending and you should short the stock. Of course, it may take a few days for these armchair Einsteins to formulate their new bear thesis around Tesla with this China news. So, in the meantime, let's see what the mainstream finance media had to say. Are they being fair? Are they being incredibly bearish? Or somewhere in between? Let's find out. But first, hey guys, if you live in the US and would like up to 2 free stocks valued up to $1,600 each, use the link in the description to WeBull and deposit $100 in your account. Each of these stocks will be a minimum of $8 in value, so if you suck at math, that is a 16% ROI on $100. Not bad. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
The announcement coming days before Tesla is set to report its quarterly results. Let's bring in Emily McCormick for the very latest on that front. And Emily, what are the implications here for Tesla's overall footprint, given that they have really started to ramp up the activity at the Shanghai factory?
Absolutely, Kiko. And this does represent a strategy shift here for Tesla. Remember that the company just began delivering cars made at that Shanghai Gigafactory in late December, and then in January to customers who are actually outside of the Tesla ecosystem. That really Gigafactory has been seen as the linchpin of the next leg of success here for Tesla. The company now going to be able to really ramp up the demand that it's able to fulfill based in Europe. And just taking a look at this new announcement, the company is going to be exporting its Model 3 vehicles made at that Gigafactory to 10 European countries, which include Germany, France, Italy, and Switzerland. So major demand centers here for Tesla.
So if you were to take just a totally wild guess, where do you think it would be more economical to produce a Model 3? In China, paying China wages with a localized supply chain sourcing most of its materials and parts from China or Asia at least, versus making the equivalent vehicle in California, paying California wages with a lot of the supply chain based in the US. What's your guess? My hunch is that it's more economical to produce these vehicles in China by a pretty enormous margin. But why would Tesla, if there's still demand in China, begin exporting to other countries? It doesn't make any sense, does it? Well, I beg to differ. Let's think about this at a high level. Tesla's ultimate goal, their crown jewel, will be solving autonomous driving. They've been building US-based vehicles and deploying them in the US for years. They're collecting data in the US, they're miles ahead, and US-based autopilot is further ahead than anywhere else on Earth. China-based autopilot has also been collecting data now for around a year with the made-in-China Model 3s. You see where this is going? Europe, however, has been drip-fed Teslas made in the US to date. They're not very high margin versus the China vehicles, and there's not enough of them flowing to Europe. In my opinion, Tesla now has made an executive decision to continue supplying China, but also start trickling their vehicles into major European markets ahead of the Berlin Gigafactory beginning localized production, so Tesla can get a head start on solving full self-driving in some of those key European markets. Pure speculation on my part, but that is my hunch.
Now, remember, of course, Tesla did earlier this year break ground for its Berlin Gigafactory, but that, of course, is going to take some time to actually ramp up and to scale and be able to actually manufacture vehicles, as something that we've already seen happen at a much faster than expected timeline out of Shanghai. The company has targeted building about 150,000 vehicles this year at that Shanghai Gigafactory.
And for those of you playing along at home, Tesla has already informed us that long-term Shanghai will be producing 1 million Teslas per year, and Tesla's Berlin Gigafactory, 2 million vehicles per year.
Now, of course, Tesla is not the only car maker to use China as a means of sending electric vehicles to Europe. We also have BMW also planning to send its iX3 electric vehicles produced at its plant in China to Europe as well. So a strategy that we're seeing at both these legacy automakers and now at Tesla here with these electric vehicles. And as you mentioned, this is coming just a couple of days ahead of that company's third quarter earnings results. That report coming out Wednesday after market close. We did get results reported on the delivery front. Earlier this month, the company did report a record number of deliveries at more than 139,000 during the third quarter.
Is it just me, or is Yahoo being extremely reasonable, fair, and unbiased in reporting this news from China? I mean, like, really? Where's the, like, oh my god, there's no demand? I'm impressed, guys. Well done so far.
A big about face from what we saw from some of these other legacy automakers like General Motors and like Ford that had reported year over year declines in their auto sales. So Tesla's still seeing strong demand, at least based on what we've seen so far for the third quarter.
And just to emphasize how true this is, here we're looking at US best-selling automotive brands last month and year to date. Just look over at the year to date figures for vehicle sales in the US. It is an absolute sea of red. Down 15%, 21%, 52%, 12%, 32%, 27%, 35%, 29%. And then we have one automaker with year-to-date growth in sales. One. And guess who? Of course, it's Tesla. This tells you everything you need to know about what's going on, at least in the United States at this point in time. I mean, look at that.
Yeah, Emily, it's interesting you talk about the strategy out of China for other car makers too, because we've really started to see factory activity there ramp up as a result of the country being able to contain the virus to a certain extent. So we'll continue to watch that. Thanks so much for that.
And now let's see what Jim Cramer, a recent convert to a Tesla believer, had to say about Tesla's Q3 results and what it might mean for Tesla stock.
Tesla. All right, I won't pretend to know how high Tesla stock can go. A $400 billion valuation seems kind of crazy, but so did a $300 and so did a $200 billion. Here's what you might be missing though. The buyers know that Elon Musk will get Tesla to grow into that market cap. I don't know how they know that. They just do.
This is a deceptively important point from Cramer. He's kind of right. Now, let's unpack this. I can't believe I just said unpack this. What the fuck am I? Did I just get my MBA or something? Jesus Christ, guys. Please forget that I even said that. Let's talk in a little bit more detail about what Jim just said, because I think he's onto something here. The way that I sort of view Tesla stock, their market cap, and their current valuation is really based on the fact that there's more visibility about what Tesla's future looks like in terms of probabilities. The probabilities, the future looks very bright. We can see further out into the distance for Tesla than most other companies in the investment landscape. That's why Tesla's valuation is so insane at this point in time, because people can see more than 1 or 2 days in front of their feet, more than 1 or 2 quarters, more than 1 or 2 years. We can see a decade plus into the future, and the future looks so incredibly bright. It's a done deal. Tesla has won the decade, and the market recognizes this. That's why at the moment, Tesla's selling 500,000 vehicles per year, but valued more than all the other automakers combined, because we can see so much further into the future. And that future shows most other automakers are bankrupt by the end of the decade, and Tesla is dominating EVs and energy and plenty more.
And they won't be dissuaded. I've always said Tesla's a cult stock, even after I joined the cult last year, that shareholder base isn't going anywhere, and neither am I.
Love him or hate him, the fact that Jim has now joined the Tesla cult and not only has bought the stock, but is publicly stating he's not getting out, he's in it for the long term, is going to have a material impact, I think, on Tesla stock over the long term. Remember, Jim has a lot of influence and a large platform that is broadcast into the homes of many mum and dad retail investors in the United States. Whether or not you like him doesn't matter. His opinion, his thoughts, his position on stocks influences many people in the wider marketplace, and this matters.
Is that circular reasoning? Absolutely. It's also giving you a monster gain in this one. Much to the chagrin of short sellers, Tesla's shareholders genuinely believe that no one else will ever build a better electric vehicle.
Guilty as charged. In my opinion, Tesla has won the decade. It's now just a matter of watching it play out. Don't forget, I'll be live streaming the earnings call tomorrow. I'll be posting a link later today, so stay tuned. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and stake using the links below. Open a new WeBull account, deposit $100 and you'll get 2 free stocks valued up to $1,600. And stake, spin the roulette wheel, you'll either get Nike, GoPro or Dropbox. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.